It's easy to talk about your winners. It's easy to brag about how much money you've made day trading. Well, sometimes you lose money. Sometimes you have to lose money. You have to cut off trades. You're going to walk away with a red day. It's not always green, happy, happy, happy. Today, I'm talking about a $2,000 loss that I had just yesterday. Going to break down the trade, what I did wrong, my overall thought process, the emotional battle, and all of that fun stuff right here in this video. So make sure you stay tuned. What's going on, guys? Patrick here. Today, I want to talk about a $2,000 loss that I had just yesterday, what I did wrong, just the overall thought process behind the trade and why it went so wrong so quickly and why I ended up walking away with a $2,000 loss. We're going to break it down. We're going to look at the chart and we'll get into it. So I know a lot of people on YouTube only talk about how much money they make, but I want to share with you guys the truth behind trading and the idea that you're not always going to be right. You're not always going to make money. There's going to be red days. You're going to lose money, and that's just part of trading. If it was just, profiting, it wouldn't be called trading. It would just be called profiting. I think that's how it would work. All right, so let's look at the chart. All right, so just to give you a little background, yesterday I had put options in the morning. I held put options overnight on the SPY, and then the next morning the market ended up gapping up here. And you can see on the smaller time frames. So yesterday morning, the market actually gapped up from yesterday's close. So we closed around this 471 level, and then the market opened up here at the 472. And I had 468 puts and 469 puts at that point. So I basically was making a trade believing that the SPY would be below 468, below 469 by the end of day on Friday. I actually had January 19th put options, but I was looking for a move on Friday today down below that 468, 469 level. And well, today the price of the SPY is $462.73. So it got below that level, I'd say, below that $468 level pretty beautifully. Now, if you look at the chart, kind of what I was looking at. So hey, it's never fun having a red day. Do me one big favor, hit that like button, help me help you. If you guys haven't already checked out Interactive Brokers, there's a link down below. You can learn more about the broker that I use for buying and selling options for trading stocks, and also check out Trade Ideas Scanner down below. And let's get back into the action. So on Wednesday, we had this little kind of doji on the daily candle, and we had trouble at this level, this previous kind of resistance after pulling back. We bounced off here. We went green, and then you can see that doji candle. We had that red. We had indecision. The buyers didn't know which way the price was going to go. The bears, the bulls were battling, and that was when I started to buy put options. And you can see here, I was buying put options on Wednesday when we were up here at the 470 level, thinking we were going to break down below this 469 level, 468 on Thursday, and then on Friday. But what happened is we ended up gapping up there. So you can see up to the high of 472. So in the morning, I woke up, I saw that my put options were red. I saw the market was starting to trend higher, and I was like, well, I'm going to get out. I'm going to take my profit, or I'm going to cut my loss off here, and I'm going to be done. All right, so I cut off. So I ended up selling my 469 puts and my 468 puts there at open when we pushed up here the almost 473 level. And at that point, I was like, well, if I'm gonna take profit on my puts, maybe I should buy some call options, because I think the market might push above this level here, this 473, and then we can get a push, thinking like we're going to get a push from 473 kind of like up into the 475s. So I ended up buying 472 call options that were actually pretty cheap at the time. So I bought the 462 call options yesterday after the market opened, seeing that we were pushing higher. Now, the issue with that is, where did I go wrong with this trade? What was my overall issue, and why did I screw up so much here? And why did I end up losing $2,000 that day? So first off, I took a big loss on the put options because, remember, I bought the put options down here at the 470s. It pushed up here to 473. So the premium really got just totally destroyed on those put options. And at that point, I was already down and at that point I was already down like $400, $500 off of those put options there. So I was like, well, like I said, I'm going to switch over to buying call options, in which I made a really, really big mistake. And the issue, again, like we talked about just the other day, looking at the bigger picture, you can see how the market was trending higher at open, into open, or out of open. Once the market opened, we push up here to the 473. I'm thinking, okay, I'm going to buy call options. So I ended up buying call options here on this pullback. And well, you can see the pullback just turned into a overall sell-off, and the market actually just got raped and just got destroyed and went down here to the 464 by the end of the day. So I ended up getting out on those put options. So I ended up getting out of the call options. I think once we broke below this level here, so I ended up getting out of those call options kind of once we couldn't hold this 467 level. Remember, I had another kind of day, so I'm thinking, okay, we're going to bounce here and we're going to push up to this. And the issue with that was, obviously, we just kept going lower, and I ended up getting up for a big loss. But again, the real issue, or the real problem here with this trade, or I think my mentality, my emotion around it, or whatever, is thinking that, okay, the market's pushing higher, my put options are in the red, I'm going to switch to call options. But on the small time frame, on the 15-minute time frame, you're looking like this. Okay, this is looking like it wants to push up here, right? Like, it looks like it wants to push up. When we're kind of looking, like, if you get rid of that big red candle, like, it looks okay, it's going to push up. Now, obviously, when the market opened, we didn't have these doji candles exactly like they are. But the one thing that I really should have focused on that I didn't focus on, again, looking at the bigger picture, is looking at the daily chart. Now, where is that resistance at that day? Remember, we had this candle here, that doji from Wednesday, right? Where was that resistance at? That resistance was right here. The high on that yesterday's candle, the doji there, the high was 473.20. Now, if we go here and we draw a line, it's pretty easy to see that there's resistance right at that level. Resistance at that level. But from Wednesday, the high being resistance, and then on Thursday morning, the market trying to push up to that resistance. Now, if we go back to the small time frame, after identifying, where that big resistance was, well, look what I ended up doing. I ended up selling my put options right at resistance. Now, why would I do that? Again, it wasn't because I don't understand that I should hold knowing that there's resistance there. I don't understand, how stocks work or whatever. But I was too focused on the smaller time frames, and I wasn't identifying that just yesterday's high was literally right there at 473. And you can see we pushed to 473, we got denied. So what's the moral of the story here, right? Like, what is the moral of the story, Patrick? The moral of the story is my bias, or my trade, my plan was that this was going to push down here to the 468, 469 level by Friday. So looking at the big picture here, if we see that there's resistance on that 473 level from the previous day, the previous day's high was 463 resistance. We didn't push above that. So I really, at that point, I should have been holding my put options, seeing how we reacted to that level. I should have held my put options. If we got denied there at the 463 or 473, then I easily should have been like, okay, cool. I'm going to hold my put options now. Now I feel good. I can see that there's resistance there. I'm going to hold my put options because I believe that this is going to trend lower, knowing that resistance is at that level. So instead of, looking at the bigger picture, understanding that resistance was there, I was just quickly, like, emotionally like, well, screw it. I'm going to buy call options because my put options are losing value, and I'm just going to switch to being bullish because I think the price of the market's going to go higher here because, it's green. I think it's going to push, right? But instead, it was one very simple issue, one very simple flaw was basically, like I said, I'm switching my overall plan, my overall trade plan. I'm switching it based on what? emotion because we gapped up or we pushed up to this level. I'm not focused on what's really going on with the chart. I don't look like, oh, there's resistance there, I should still hold these puts. Really, I shouldn't have gotten out of those puts until we broke above this level at the 473.50, or above the previous day's high. Really, like I said, the previous day's high was the resistance. That should have been my kind of like, okay, that's my stop loss, right? That's the point that I'm going to get out of the trade, because at that point, if we break above yesterday's resistance, it's now confirming that the market is bullish and the market is probably going to push higher, because if we push above here, well, the next resistance really isn't until all the way up into this level. So I can see, like, just looking at the chart here, like, where's my next resistance? It's really not until 477. So we break above 473, well, then I should have been buying call options. But instead, we had a double top there at the 473 level, and you can see the market dropped from 473 down to a low today of 459. So my $469 call options would have been just, you see where I'm going here with this story, right? You lose money sometimes, not because you're wrong or you're right with the trade or vice versa. You end up losing money because you're just emotional, or you're just like, damn it. That was purely me waking up in the morning, seeing the market had gapped up, seeing the market was green, and being like, all right, screw it. I'm going to just jump into call options. I'm going to buy call options because I think the market is now going to push higher. And well, that was a really, really bad idea, because those call options ended up just getting crushed. And well, they were down like 89% by the end of the day. And like I said, the issue really, like I said, and the issue is I FOMO'd into it, and then I ended up getting out down here for a major loss. So a $2,000 loss here on that trade, which this trade could have been very, 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 very profitable. So instead of losing $2,000, I could have walked away with $4,000, $5,000 in profit if I would have just held and stuck to my overall thesis, my overall plan here, right? If I would have just held and I would have believed that the stock market was going to go lower just like I planned, knowing that that resistance was there, well, then I would have profited beautifully. So there it is. Yes, there is the bad, there is the good. You do have red days with trading. It's not all just rainbows and happy times and, all that fun stuff. So I wanted to put out some real videos here. This is as real as it gets. I'm showing you my broker. I'm showing you I'm losing the money. I'm showing the loss and all that fun stuff. So if you guys haven't already, do me one big favor. Hit that like button. Hit the subscribe button. I'll talk to you guys later on.